We bring in via Zoom Group Managing Director and Chief Executive Officer, Cowrie Asset Management Limited, Johnson Chukwu. Good morning. Good to see you again.
Good morning. Thank you for having me.
Indeed. Welcome. Welcome to the program. How optimistic are you about this partnership?
Well, I'm always an optimistic person. The key thing I understand the economics behind what IMF and IFC and Central Bank are saying. So given that, I think it is doable. And basic thing is that IFC wants the Central Bank to kind of give them some level of currency risk insurance, kind of to say, look, I'm going to lend to Nigerians in Naira. Well, of course, IFC does not trade in Naira, so IFC trades in dollar. So IFC will provide dollar funding that will be disbursed as Naira loan, and the Nigerian entities will pay back in Naira. But the central bank will guarantee IFC that they will get the same value of dollar when the payment is made, because the currency is depreciating or devaluing. So if, for instance, IFC lends to you $1 million maybe a year ago, and that $1 million officially was 460 million Naira, today you need to pay about 1.6 billion Naira to pay that $1 million. And ordinarily, most Nigerian businesses will not be able to pay 1.6 or 1.7 billion Naira for a 460 million Naira they took. So what IFC is saying that central banks should stand in the gap and provide some assurance that, look, when these Nigerian borrowers pay back, you will convert back this to dollar in the same value that we have provided with the margin, with the low interest rate that IFC also will provide, or relatively low interest rate. So I think it's doable. I can see the opportunity. The key thing is that the central bank must have a war chest or the liquidity or the reserve to guarantee such dollar loans in terms of exchange rate.
Does it look like we have it?
Well, today, the central bank governor said we have about $40 billion in reserve. And the total amount of this exposure in a few years will be $1 billion only. So I think it's quite within the limits of the central bank capacity to fund. I don't think that amount is too much for the central bank to guarantee in terms of currency exchange rate stability. So what they're basically going to do is to say, look, I'm bringing this money in at 1,700. In 1 year or 2 years' time, when the loan is paid back, you convert it back to me at 1,700. So that's basically, so the CBN goes into a forward deal and locks the price and puts aside that funding.
Okay, so, excuse me. In the past, there have been several policies aimed at improving the lives of people, improving businesses and all of that. What's the difference between this one and every other policy that we have seen in the past?
Well, it depends on which policy you are referring to. Of course, this policy is not targeted at, basically, it's not primarily said it's going to improve the living standard of Nigerians. Of course, if economic activities improve, if businesses can borrow at relatively cheaper cost, it will help improve productivity, which will lead to improvement in employment and improvement in income, which will ultimately improve the standard of living of Nigerians. There are policies that are targeted at intervention. This is not an interventionist policy. Those policies are what you may call the government's primary objective is to improve the living standard of people or to cushion the adverse economic situation, such as the conditional cash transfer the federal government had. Those are directly targeted at those at the bottom of the ladder, or the rung of the ladder. But this policy, IFC, is a private sector arm of the World Bank. Its credits are relatively more expensive than the interventionist or development finance credits. Their credits are relatively priced at commercial rates you will get from international banks globally, maybe marginally below that. But the key thing in this time around is that they, being an arm of World Bank, will go to sectors that require some level of intervention. Like what they mentioned, agriculture sector requires some level of intervention. Agriculture accounts for more than 22% of the GDP. It grew at only 1.41% in the second quarter of this year, which means it's growing far below its potential. Look at infrastructure. We have one of the highest infrastructure deficits in the world. You look at areas like energy sector. I mean, it was reported yesterday that most northern part of the country have been on blackout. For those of us in Lake, we were on blackout for more than 4 days. We have severe energy deficiency. Look at growth sectors of the economy like the creative industry that is not getting sufficient funding. So that's where the IFC come in, and where they can actually say, we have this underdeveloped country. We are going to intervene in sectors that build growth opportunities, where those sectors ordinarily will not be able to get funding from international financial institutions.
Okay, so